CNBC-TV18.
Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me are Shruti Mishra and Ritu Singh. These are the top headlines from the startup world. Climate tech startup EcoZen backs $25 million in equity and debt capital in its Series C round as it looks beyond agriculture to expand into new deep tech fields worldwide. The Series C equity portion was led by Nuveen and Dare Ventures, among others.
Prop tech startup Landeed raises $8.3 million in a funding round led by Draper Associates, Y Combinator and Bayhouse Capital. This capital will be used for hiring and strengthening the technological infrastructure of the company.
Logistics startup Porter announces liquidation of 50 crore rupees in ESOPs for its current and former employees. The employees will be able to sell the eligible options immediately at a 50% higher value than the last liquidation valuation.
BharatPe appoints 3 top executives in compliance and corporate governance roles. It has hired Ambuj Phalla as the Chief Information Security Officer, Rahul Bhatia as the Head of Internal Audit, and Ravinder Oberoi as the Head of Compliance.
Zomato reintroduces its Gold loyalty program with a focus on food delivery at an introductory price of 149 rupees for 3 months. It will also enable users to avail of discounts after dining for restaurants.
After chasing Google for years in the artificial intelligence race, Microsoft is hoping to leap forward, announces a multi-billion-dollar investment into the company that developed ChatGPT. Microsoft could use the AI platform to mount a serious challenge to Google's search business.
Amazon is offering a $5 monthly subscription plan for US Prime members that will cover a range of generic drugs and their doorstep delivery. The program includes more than 50 medications addressing over 80 chronic conditions, Amazon Pharmacy's chief medical officer told Reuters.
Those are the headlines we've been tracking for you this evening. India's healthcare system was put to test both during and post the pandemic. Health institutions took a major financial hit, and this catalyzed the need for adoption of technology across the sector to manage their patients. With a growing need for health facilities and infrastructure across the country, will Budget 2023 fuel startups who are supporting the digitization of healthcare? To talk to us about the budget wish list for the health tech sector, joining me now are Mudit Danwate, co-founder and CEO of health monitoring startup and Geeta Manjunath, founder and CEO of Niramay Health Analytics, that offers breast cancer screening solutions to detect early-stage breast abnormalities. Also joining me is my colleague Arundhati. Geeta and Mudit, welcome to Startup Street. Let me start with you, Geeta. The public expenditure on health by the union and state governments has stayed at just about 1%. Are you expecting a bigger allocation for the health sector in the upcoming budget? Also, what's on your wish list?
Yeah, hi, Shruti, and nice to be on this show. Yes, I think, and I'm very, very hopeful that we will have a better, percentage allocated to digital health, allocated to wellness, allocated to startups who work on healthcare, as well as allocated to people's health, right? Given that we had a huge outburst on the COVID front in the last couple of years, hopefully, the government would have realized that there is many more things that can be done in health tech, and hopefully there will be additional budget allocated.
Absolutely. Geeta, hi, Arundhati here. So one of your big asks is the provision for soft loans and working capital for health tech startups which have long gestation periods. Why is this key?
Yes, yeah. So I have actually 3 wish lists. One is, yes, we want to we want government to enable soft loans and working capital for the startups. Second, I want to have special tax provisions for employees of startups, particularly people and startups who are scaling up. And thirdly, I wish government can actually incentivize more wellness and preventive care activities, right? On the first topic itself, I feel, there is good capital for early stage startups, especially health tech. But as you grow, as you scale up, and you want to sort of expand really well, you need good working capital. For example, when we are doing this breast cancer screening, and we want to do it in, let's say, 100, 200 centers, it'll be great to get some initial capital funding for the devices so that we can now just do pay-per-use for the screening operations, right? So something like this, when you have an AI-based system, the equipment cost has to be funded. And these we are not yet, early stage startups will not be profit making as such. So instead of using equity funded money, it'll be great to actually have some working capital which is coming in from government support. It really helps in scaling up the solution, I feel.
Okay, Mudit, do you agree with her? And also, what is your big ask? What will help bolster brand India and raise global awareness of Indian medical devices to strengthen the government's vision of Made in India and for the world?
No, I'm 100%, in alignment with Geeta over there. Spot on. Geeta, I wish your wishes come true as well. Second is, I think extended this further. I think one of the big asks I would say is GST, right? Currently, as we see that, as we are moving along, we are seeing AI analytics services are also being an important part of giving medical care, and not just the devices and consumables per se, right? And right now, if we see the GST rates which are put on these essential services as well, it is at 18%, right? Which I think is little detrimental, because at the end, these are, transferred to the end consumer, right, one way or other. I think if it can be brought down, it can really bolster the further penetration of quality care as well within India. One is that. Second, I think, of course, heavier investments are required, which, Geeta also spoke about. But even from an infrastructure point of view as well, right? Today, we lack a lot of beds, facilities, and so on. I think 2 million beds that we have today is not enough. I think India needs nearly about 4 million. A lot of reports have come out as well from Niti Ayogs to everyone that, India needs more hospital beds, ICU beds, infrastructure in itself. I think more capital is needed over there.
Yeah.
To raise the standards and make it, world class, I think we need to raise global standards in terms of quality, privacy policies, and so on that we adopt. Although we want it to be at economical cost, but our bar needs to be very high. And that is, I think, something. Yeah.
Yes. Mudit, the medical device sector now is part of the PLI scheme. But how many years will it take for medical device companies to actually use these funds, start projects and ensure that India is self-sufficient in medical devices, as it's just not enough to have policies if they are not implemented speedily? Your views on this?
No, you are absolutely right. And I am with you on this. One is policies, which is great. But, what is also as important is the adoption and at the end, implementation of these policies as well. I think PLIs, it's a good step, in healthcare it is over there, but, how to actually get it, even I am also not, entirely clear on how to, get the benefits of this and all that. It's to be much more clearer, right? And so that we can take help of all of these very, important policies.
Absolutely. So you need a little bit more clarity on that front. Mudit, hi, Arundhati here. Now, artificial intelligence, digitization, remote monitoring are technologies that are aiding healthcare in remote areas. So what more needs to be done on the tech and R&D side from a policy perspective?
So I think from a policy perspective, what is required is a policy that facilitates innovation. At the same time, it maintains the quality, especially pertaining to privacy, quality assurances, and so on. Right. So I think policy needs to be, broad enough so that it kinds of bolsters the innovation part of it. But at the same time, it needs to be very tight so that, there are no data leakages and, abuse of the system as well, right? That is the thin line that we have to, design some policies around that.
All right. And Geeta, if I can bring you back into this conversation, one of your big asks is a special provision for deep tech startups to help retain talent. So do you think tax rebates for employees of qualifying startups and removal of double taxation on ESOPs will help you achieve this?
Absolutely, absolutely. I feel, as a startup, right, and we, especially health tech startup, we need to be capital efficient, right? We need to use our money in a very, very stringent manner, because there's a lot of expenses involved in clinical studies and, setting up the different, marketing aspects, setting up the awareness about the disease and so on and so forth. So, and also regulatory clearance, it's big, right? So all of this. And so, so we are not able to really pay the employees at the top of the sort of the stack as such. It will be, of course, market, level, but not more towards the lower part of it. And so the employees are really staying back because of the vision and because of really wanting to serve people. So can we help them? Can government enable certain type of rebates, maybe like a special taxation, like you can have all the provisions and prerequisites for a startup to qualify for this, maybe innovative made in India product for the world and things like that, right? So for these kind of startups, if we can actually give special tax rebates for employees, then they can actually keep the tax savings into their kitty, right? So that is one, my ask. And secondly, even during the ESOPs, we just heard in the headlines about ESOPs, a company giving away. But the flip side is that ESOPs, when exercised, are immediately taxed. There's so much of risk in many startups, any startup, including health tech startups, and it takes time for it to mature and liquefy, right? So liquidate. So I
All
feel
right.
why, yeah.
Sure. All right. So, we've completely run out of time. So, bigger allocation, tax rebates, and of course, removing the double taxation on ESOPs are some of the bigger demands. Many thanks, Geeta and Mudit, for joining us on Startup Street today, and wish many more of your demands are, all your wishes come to fruition on the budget day.
Thank you.
Thanks a lot.
Thank you very much.
Thank you.
All right, moving on. Online travel tech platform EaseMyTrip has acquired a 55% majority stake in CheckIn through the primary route. CheckIn is a real-time marketplace that allows travelers to bargain with hoteliers. The venture claims the unique bargaining algorithm of CheckIn brings in top 5 lowest offers by the hoteliers, enabling customers to stay at the most value for money hotels. To talk to us about the acquisition and the road ahead, joining me now are Lokendra Saini, the COO of EaseMyTrip, and Venu G. Somineni, founder of CheckIn. Also joining me is my colleague Ritu. Gentlemen, welcome to Startup Street, and let me start with you, Lokendra. For how much have you acquired the majority stake in CheckIn? If you could tell me about CheckIn, it is a novel concept for India. What kind of usership does it have, and how many downloads? What are the top market that it services?
So CheckIn has been one of the most strategic acquisitions we've done in recent time. And, with the unique algorithm of CheckIn, now users not only have access to hotels, but they can also reach out to the villas, the homestays, and, direct owners of these places, and can directly negotiate on the prices. So it gives advantages on both the sides of buying and selling in the market in real time. For us, this deal has come at a 55% stake for 3 CR worth of value.
All right, so 3 CR. Lokendra, also, what is the kind of revenue impact you hope to create for your hotel booking vertical with this acquisition?
This is too early to talk about the impact it is going to create. We are looking to run this business in 2 ways. One, obviously, we would like to absorb the technology of CheckIn, what Venu has developed with his team in the EaseMyTrip ecosystem. And from the current levels of where users can only book hotels and other accommodation properties, now they will also have option to also reach out to the hotel owners and directly negotiate with them. So it's too early on the path of growth to claim any numbers, but we are highly optimistic about this acquisition.
Well, Venu, a 3 crore rupee deal for a 55% stake, fairly small. Actually, we couldn't find much about you in public. So if you could tell us, how many hotels do you have on the platform? And also give us a sense of your financials. How much revenue are you able to generate? How much profit are you able to generate?
Yeah, just to answer that, I just want to give a quick background. All the OTAs on the planet today, they all follow the same template. It's all fixed price and the price war anyway. So we thought hotel booking in a very different
Okay, I think we have Venu on a bad line. We'll have him back with us shortly. But Lokendra, if I could come to you on that question, if you could tell us about the financials of CheckIn. What is the revenue it is generating? What are the profits? Because we wanted to get a size of the company. The deal is fairly small.
You know, CheckIn is a concept which is going to be taking some time in getting adopted in the market. What is really interesting is, you know, this kind of algorithm has never been tested before in the Indian markets. So this not only brings a kind of novelty in the overall hotel and accommodation space, and in terms of talking about the numbers, you know, like I said, this is a very new business that CheckIn has got into, and we have to develop a market, and obviously early adopters are going to benefit a lot out of this.
Lokendra, what are the average bookings on CheckIn? If you can tell us who are the competitors and how do you plan to monetize both their verticals, B2B and B2C of the business?
Absolutely. So, you know, CheckIn for us offers everything, you know, which any current player is not able to offer, which is, you know, allowing reach of end user directly to the hotel owners. And there has been a significant gap in this space, you know, where users have been trying to find out better deals, but their journey would just come to an end to an online travel platform or, you know, at max on a meta platform. But through this deal, now they have access to reach out to the end owner of the property and have better option of, you know, getting a more negotiated rate. And on the you know, supply side, I think it creates a lot of value because sometimes, you know, the inventory gets unsold for a very significant period of time. But through this, you know, even at a lower price, if a hotel owner is able to sell the rooms or the property, you know, to the end user, it brings a significant revenue to their books as well.
But, you know, Lokendra, since, again, you did not tell us what kind of numbers CheckIn makes, what is the size of the company? We're just trying to understand how many hotels are listed on their platform that are unique to CheckIn that EaseMyTrip does not already have.
So, you know, to answer this question, I have to, you know, kind of merge it with two statements. One, it has number of hotels which are already listed on other platforms. So it does not kind of bring all of the unique inventory on the platform. But what it also gives access is to those hotel owners to directly speak with the consumers. That's number one. Number two is, you know, there are definitely more than 20,000 odd plus hotels which have not been selling highly because of the ranking order or a lot of other algos on other platforms, who now get direct access to the end users. So, you know, in terms of unique hotels, I would not be saying it's very big in number, but collectively it gives access to all of those hotels which are otherwise also listed on the platforms elsewhere.
All right, so 20,000 hotels on the CheckIn platform, not all of them unique to what EaseMyTrip already has. Venu, we have you back. A quick question again on what kind of revenues and profits you're generating, if you could tell us that. And why did you choose to partner with EaseMyTrip? Was it, you know, to achieve scale for the company, which you on your own perhaps could not?
Okay, firstly, we brought in 60,000 plus properties. Of course, there will be overlap, but the model-wise, you know, we are talking about a bargaining thing, and so it's totally different perspective for the travelers. Why we joined with EaseMyTrip is that, you know, so they're very strong in flight booking, and they're also doing quite good in hotels. And we see a tremendous synergy that, you know, okay, you have 11 plus million travelers, and we can definitely, you know, help them get into right hotels at the best price, right? So that's like, you know, straight away, you can see the synergy there.
Recording in.
All right, we've run out of time. So Venu and Lokendra, both of you, thank you very much for patiently answering all our questions here on Startup Street. We thank you very much for being here. On that note, we have to take a short break, but coming up next, Matt Street Den backs $30 million in Series C round. We check in with the company's co-founder on how it plans to use these funds and grow the company further.
Welcome back. You're still with us on Startup Street. Chennai-based AI and technology startup Mad Street Den has secured Series C funding of $30 million. The company has welcomed a new lead investor in Avatar Growth Capital for this round, which also saw participation from existing VCs Sequoia and Alpha Wave. In an exclusive chat with CNBC-TV18's Jude Sanif, Mad Street Den's co-founder and CEO Ashwini Ashokan said she doesn't expect to use these funds to hire or expand aggressively. Here's more from that conversation.
I don't think when everybody was going nuts in 2021, 2022, we didn't go nuts. And when everything is sinking in 2022, 2023, we're not sinking. So I would argue that it's been a story of steady state. Right. You know, companies that are growing in a certain way and building very specific things that the market is really demanding for right now will always find capital. I don't think it's a question of, you know, yes, there is a liquidity crunch, there's no doubt about it. But there is money for companies that are growing. And there is money for early stage. And there is money also for growth stage if you are able to grow in a specific way and cater to the demands of the market. And, you know, there's always money.
Right. So let's break down the funding round. 30 million is what you've got in this round. Avatar Growth Capital has come on as your new lead investor. Take me through what the funds will be used for. Are you foraying into new areas? Where will they be deployed? And what does Avatar really bring to the table?
Yeah. So for the last couple of years, we've basically, you know, trying to expand on our offerings as well as our foray into new verticals like finance, logistics, insurance, pharma, healthcare. And we've always envisioned the company and the platform to be kind of a general purpose, but also, you know, going very deep into very, very large enterprises to solve very specific problems for them, right? These funds specifically are, in a sense, a kind of a milestone of sorts to kind of just double down on what we've already been doing, right? So new markets, new geographies, and just continuing to double down very deeply into these organizations, right? Because we are talking Fortune 500, we're talking Fortune 1000, Fortune 2000 type companies. Those are typically the kind of scale of enterprises that we end up working with. And they don't come to us for just buying like one thing, right? They're coming to us for buying the entire platform and for kind of, you know, adopting AI as part of their DNA. We are an enterprise AI company that is going deep into organizations and helping them transform with AI, right? You've heard digital transformation over the last decade. This is the decade of AI transformation.
You will be hiring now, given the fact that you want to ensure optimum depth going forward?
We don't really need to, is the reality. We're just coming out of a very successful acquisition. We ended up, you know, acquiring a leader in the retail space with reference to excess inventory out of New York just about 3 months ago. And, you know, we are adding people to the company, but very, very carefully, right? Because, again, our value proposition in some ways as a company has been that we've been able to show up as the experts who can help people truly understand what to do with this and how to actually get meaningful, you know, kind of ROI out of this, right? And so it's less about, we will be hiring, we'll continue to hire. We're 275, 300 people today. That's a small number for a company of our size, and we're very proud of that. But we are growing, like I said, we've been hiring globally, right? Whether
so
it's
how many
in the
are
US.
you adding to your headcount of 275 to 300?
Not a whole lot, probably 25 to 50 people, no more. But again, people who have that kind of depth, you know, in terms of being able to deal with this kind of complex AI is probably where we're going to be spending the most amount of money.
I noticed you're treading cautiously as you have been doing so as to, you know, keep a stable ship, and that is certainly a good thing. But I also have to ask you, moving forward on the revenue front, where do you see growth going from here?
You know, it's not a question of being cautious or not cautious. I think at any given point of time, you've got to take your bets, right? You've got to figure out where the risk is and where the risk is not. For us, we've consistently taken bets on what we're building as a company, right? Which means the platform, the product, the core AI, and the IP we have around this is where we've pretty much invested all of our muscle over the last few years, right? Our caution has obviously been in the form of the team or the growth or the scale. Like, we want to be able to do things right and to be able to do things very, very deep, right? And sometimes that just means shutting out the noise in the market and doing what you do best and really playing to your strengths and DNA as a founder. For us, that's really been where our focus has been, right? And over the next couple of years from a revenue, we're growing 100% year over year and north of that even. And so we're just going to continue to double down on.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.